Now, the World Bank's latest growth outlook shows the East Asia and Pacific region continuing to outperform the rest of the world, but warns of roadblocks ahead that could slow its momentum. The World Bank has revised its regional GDP growth forecast for this year to 4.8%, down 0.2% from last year. The slowdown is expected to continue into the new year as rising protectionism and domestic challenges weigh on regional economies. But the bank raised its 2025 growth forecast for the world's second largest economy, China, forecast to grow 4.8% this year, up from the 4% predicted in April, but missing its official target of 5%. Some bright spots in Southeast Asia, though. Vietnam leading the pack with a 6.6% growth expected this year, and the Philippines at 5.4%, both boosted by tariff exemptions in key export sectors and domestic structural reforms. But challenges persist. Economies across East Asia and the Pacific face high youth unemployment and low business and consumer confidence, which have not returned to pre-pandemic levels. The World Bank added that creating more jobs and sustaining growth will require ambitious reforms as the region navigates global uncertainties. And for more, we're joined by Aaditya Mattoo. He's a chief economist at East Asia and Pacific at the World Bank. Thanks for joining us today, Aditya. So the World Bank's projections show that East Asia and the Pacific region is expected to grow at 4.8% this year, which is slightly down from that 5% in 2024. How much is due to the U.S.'s trade policy, as well as things like advancements in AI, and what other factors are driving this slowdown in growth?
We identified three factors. We do see external protection. We do worry about high global policy uncertainty, which has declined, but still high. And finally, the slowing global growth as the three main determinants. But they are compounding, in some cases, domestic difficulties.
Right. The report did flag some bright spots, though. So we're looking at Vietnam, Mongolia, the Philippines. They are expected to lead the region in growth this year. But the economic outlook for Thailand, the Pacific Island nations, that came in a bit weaker. If you could briefly explain the factors behind this divergence in performance.
One of the central arguments we make is that the region and the countries in the region should not see themselves as passive victims of developments outside, but rather try and forge their own growth path through deeper domestic reform. Now, the Philippines and Vietnam stand out as two countries which have implemented significant reforms. Philippines Public Service Act has opened up to investment key sectors of the economy like telecom, energy, and logistics. And Vietnam has grasped the difficult nettle of reforming its own internal provincial structure and making government much more effective. While other countries in the region have succeeded generally in keeping their economies stable, they haven't yet implemented the big, deep reforms that would make them grow faster and generate productive jobs for their people.
Right. One other country that's being featured in the report that we're also closely watching is India, and its growth forecast for the next fiscal year has also been reduced due to the impact of those U.S. tariffs. I mean, how significant are these tariffs in terms of the impact on India's broader economy, according to the World Bank's assessment? And what are the implications of the slowdown for the South Asia region?
I should say that the report that we are talking about now is really about Southeast Asia and not about India. But we know that India is less trade dependent than some of the other countries in East Asia. And therefore, even though it faces higher tariffs, the growth impact is not likely to be as significant as it is for the East Asian countries, which are much more exposed to trade.
What about China? I mean, that is the world's #2 economy, and a lot of countries are dependent on China. They have lots of ties and relations and trade relations with China. So the World Bank has raised its 2025 growth forecast for China from 4% to 4.8%, but it does expect growth to slow down next year. Can you talk us through some of the factors contributing to this upward revision and the lower reading for next year that is expected, and how strongly do tensions with the U.S. factor into this assessment, as well as things like China's persistent property sector issues and weak domestic demand?
China's upgrade now stemmed from the fact that the higher protection we expected it to face when, for a brief period in April, levels of tariffs had shot up, and the fact that we expected the government to rein in fiscal stimulus in light of the growing debt. Those things didn't happen in 2025, but we expect them to happen in 2026. A lot of front loading on tariffs today, but probably a whole year of higher tariffs next year. And at the same time, because of the growing public debt, which is close to 70% today, we expect the government, which is committed to fiscal prudence, to rein in the stimulus. But as you said, these two proximate developments sit on top of broader structural problems. We are seeing a slowdown today in not just real estate investment, which has, of course, been a troubled sector, but also in manufacturing investment, while consumption, also retail sales, are slowing down. And all of that sits on top of broader structural slowdown with an aging population and declining productivity. And that's why we argue for the deep structural reforms which should enable China to realize its tremendous potential.
Right. And Aaditya, the World Bank also flagged that East Asia is grappling with a jobs paradox. So strong growth, but insufficient creation of quality jobs. What are the main causes, and what reforms do you think are needed, especially given the current state of labor markets in East Asia? I think some key factors that were flagged were youth unemployment, as well as a lack of women in the workforce.
You're exactly right. You know, the good news is that most people who look for work in East Asia find it. But the young struggle. As many as 1 in 7 young Chinese and Indonesians do not have any jobs. Fewer women work. The gap between men and women's participation in the labor force is as much as 15 percentage points in countries like Malaysia, Philippines, and Indonesia. But the biggest problem is everybody who works, most people who work, are now in lower productivity jobs. So even though the powerful industrialization lifted a lot of people out of poverty and strengthened the middle class, today the structural change is more from low productivity agriculture to low productivity and often informal services, with the consequence that the class of people who are vulnerable to falling into poverty, in fact, is larger than those who are secure in the middle class. And we argue that growth in jobs depends on improving capacities by strengthening education, basic science, STEM education, but also improving opportunities for people by getting rid of barriers to entry, by getting rid of the non-tariff barriers that stifle investment, not just in goods, but in services, and also allowing people to move freely, getting rid of restrictive regulation in the labor market. So this is a class of reforms we think are urgent, and some countries, fortunately, are beginning to implement them.
All right, Aaditya, appreciate your time this morning. Aaditya Mattoo, the Chief Economist, East Asia and Pacific at the World Bank.